Yeah. No. If we don't say okay, does it not record?
It's a good question. No one ever says no.
Oh, okay. Good morning, everybody. Bob Smith. I've been doing some statistical analysis and market analysis for COPA and CHPTA for a number of years, building databases and so forth. Before that, I was 30 years in banking, um, which was general management and risk management. Uh, So anyway, let's get going. Going to go over the economic summary, basically in one sheet. I'm going to try and explain the section in the latest report, which I call the Chicken Little report, and go over some market and business analysis and some of the changes in the report. As I said, I put into basically one screen um, for the economic review. So in July, and you see July, nothing much actually changed in August or September. And one of the reasons I changed the presentation of the monthly report. In July, Canada's merchandise exports rose 0.9%, while imports were down 0.7. We're really getting down to the decimal places in the reporting. Exports to the US increased 5, but I think this is one of the more interesting. Transportation warehousing lost $23,000, which says it's down 2.1%, but effectively reversing July gains because there was a gain of $24,000, 24,000 jobs in June. And that's what got me to throw in the roller coaster on the other side. So trying to interpret some of those numbers just uh, is almost impossible. Real gross domestic product (GDP) declined 0.4. Again, we're down to the decimals. I can't wait for probably another month, and they'll be going to the second decimal place to try and explain something, which explains nothing. All right. It's an aberration, or you could probably lose that in the calculation. Exports to countries other than the US were up 14%, which means a whole lot less because they were never that huge to start with. So you could say 14%, you could say 50%, that's still nothing equivalent to what we do with the US. In August, the unemployment rate rose by 0.2%, again, to 7.1. And just a little thing on the 7.1, you can't compare that to the US unemployment because the calculation is completely different. And actually, not the calculation, but unemployment insurance benefits uh, are different for almost every state in the US. So combining those numbers for the US or comparing them to the US is virtually impossible. People do it, but job vacancies fell in the first quarter. That's probably one of the most meaningful. And I kind of look at that of saying people are not, there are few want ads out there. So that's kind of where I'm looking at. But as you see, everything is point this, point that, and so forth. Okay. Exports to countries other than the US, just if you haven't looked at them, uh, which I guess normal people don't. Uh, so one of our biggest export is gold to the UK, which kind of shocked me because that's probably the way it's been for 200 years. But anyway, so on the economic, this is basically these four items is what Statistic Canada's puts out as key pieces. Population didn't change. No. Consumer price index was at 1.7. It was up less than 1%. Uh, Unemployment rate 6.9. Monthly changed. It even in the first decimal place didn't change. I don't know how many decimals they go to, but they only publish one. And GDP, as we said, the second quarter was 0.4. Uh, I think one of this, and this is kind of the theme of the presentation I'm going to do today, is one piece of the puzzle doesn't make a picture. And I think you'll see as we go through uh, is that little pieces and so forth, and they will be kicked up and exaggerated uh, in the press today, and something else will be up tomorrow. And the Chicken Little report I came up with, there's probably a better title for it. But I looked at a headline that was in the Toronto Star, and they weren't the only one. But on the verge of recession, Trump's tariffs slam Canada. New GDP numbers show. Remember, this was 0.4 over a quarter, where we know there are economic challenges. And I think that is certainly more aggressive than is necessary. But when you look at it, bad news sells and gets eyes to watch. So that's where they come up with the big headlines and, the sky is falling. But to look at it in tariffs is, I thought I had a couple of interesting quotes. One is often media often frames tariffs as the villain. However, the deeper story is about how economies respond. And I thought this was good. Tariffs don't create weakness, they reveal them. You didn't create the tariffs, but the tariffs, what are the tariffs telling you about your own company or your own industry? And for some tariffs become the catalyst for overdue changes, diversifying supply chains, reshoring, investing, and so forth. Under the headline in the Toronto Star, they mentioned 4 different items as examples of how hard the tariffs are hitting. And one of them was a Montreal company called Essence, Sense. I hadn't heard of them. And when I looked them up, I found out why is they sell hoodies that cost $500. And now I know why I've never shopped there. But what it was is there was also a comment underneath that the company had been in trouble for years. Okay, they had been losing their market. They also had Hudson Bay store. And to say Hudson Bay's problem started because tariffs or Trump's actions is really ludicrous. They also talked about lumber and canola. Those problems within those two industries have been around for years and years. And it kind of scratches your head. You know that it happens, it gets quieter, and then it comes back again. To blame them totally on tariffs that started 5, 6 months ago is kind of avoiding the problem. And the other one is trying to avoid the pitfall of blaming it all on Trump and kind of looking at what are the other pieces of this puzzle. If you haven't noticed, and people have often said to me that I like numbers too much and I look at numbers and they tell me all sorts of things, which many other people just see numbers. But I've replaced the data tables in the monthly report. At the end of the report previously, and the end of a report were a number of tables, and they covered the last 12 months. So I've changed this around to update the format, to offer commentary, more visual charts that cover the same key indicators while emphasizing emerging trends, notable events, and year-over-year comparison. Because of space, and when I'm doing this, I have 5, 6 years of data in front of me, and I'm making comments and so forth. But it's almost impossible to publish my whole database that I have set up. So I've kind of focused in and reported on different trends or events. Now, if you still require access to these tables or some of the tables, please contact me, and that'll be at the end. And I can provide a way to get them directly from Stats Canada, or I'll set up and I can still add them to the report. So what I'm looking at is, again, carrying on with the theme. One piece of the puzzle doesn't make a picture. And often many of them, and you'll hear me repeat this, is it's a slow burn. Transportation is a good example of this. Price fluctuations stem from a complex web of factors, not a single input. Okay, costs being influenced by oil and diesel prices, labor rates, or a combination of the other. And in a number of meetings I've been sitting in, people, when they go in for go to advise price increase, their client comes back and asks for breakdowns in commodities and so forth and specifics as to what actually increased. And what is multi-factor cost pressures? It's not just raw materials, labor cost, energy, transportation, packaging, regulatory compliance all contribute. Even if one component spikes, the other costs are usually quietly rising too. And that comes back to the slow burn. So looking at the number, in the second half of the tables I produced were price indexes. And these numbers are based on the price index for general freight trucking, long distance, local, freight rail, couriers. So what I wanted to show is basically the bar chart doesn't show a lot other than very little change. Now that's the price index. If you think about what are the commodities or what are the items that may be fluctuating through there are of course many that can be in there. But if you look at an example, and I went back a number of years, in January 2021, a standard basket of long distance freight trucking services cost $100, which is how the pricing index is set up. By June 2025, that same basket rose to $117, an increase approximately 17% over 4.5 years. Local freight trucking saw a slightly steeper rise, reaching 119 over the same period. But in many of the meetings I have, nobody pointed to this as saying, this means that freight trucking prices, both long distance and local, outpaced general inflation over the same period, 4.5 years. While CPI rose by roughly 13%, freight costs jumped 17 to 19%, which makes you scratch the head. And as I said, I've never seen anyone point to and say, hey, you know, I have to increase my prices because I pay for the delivery of goods to your stores, etc. So I look at that. That is really part of the slow burn. Courier costs are up 41% over 6.5 years, and rail 26. But if you look only at the last year, you go, oh, pretty stable. Not so stable if you increase the number of years that you're looking at these numbers. So kind of breaking it down. So here's a trucking index. Over the top here in black is the trucking index went over the last 12 months from 121.6 to 120.8. Not much of a fluctuation. And in fact, you saw it minor fluctuation. So it basically is running along the 120, just above. But if you sit and look at the green line, which is diesel, these are Toronto prices, it is jumping up and down quite a bit. And it's fairly, most of the time, it's in line with the price of oil, but not all the time. As you can see here, is diesel prices are going up at the gas station, but oil prices were slightly down. So that's probably a timing mechanism, but they're not the same. So even that is not an indication of saying, oh, oil prices are up, so I have to. They don't fluctuate in the same way. I find it particularly interesting with the carbon tax was canceled in April. And as you see, of course, the oil price also dropped, okay, and of course the cost at the station dropped. But there were two things happening there. Is one is oil prices did go down, uh, and the tax was taken off the pump. So there was kind of a double whammy going on in there. But if you look again at the CPI and the CPI, the background is it's based on invoice values, not commodities. So the price index for trucking is what the trucking companies are invoicing their clients, excluding taxes. Right? So that's what companies are paying. And if you look at it, again, barely moved even with the carbon tax canceled. So you start to scratch your head, and everyone knows, okay, where they may have a long contract, so on and so forth. So there is a lot of pieces at work, which is really the point I'm trying to make on there. And the lower chart is hourly pay rates versus the trucking industry. I was somewhat surprised is that these haven't moved as much, but you had the blue line there, is a trucker's hourly rate, 28.43 to 30.56. It's up and it's down. And I'll go over that. Couriers moved kind of similar, but at times the opposite. So from 27 to 27.76. What I found funny, and I looked into it, was that what's really going on. You can see here that this salary there and this salary there. Now, these salaries come from hourly rates, come from Statistics Canada, but they get them from internal revenue. So the tax department, with companies submitting their tax reports every month, and this is where they pull them from. So a lot of what's going on there is demand and turnover. Staff turnover. You go, how do salaries never go down? Well, they do go down in the big picture. So with turnover, demand, cutbacks, new hires, and so forth, the average is bouncing up and down. And the other thing with couriers is that a lot of them are piecework, and the ones that work by piecework aren't included in the number. I checked out UPS and FedEx and said, are those truck drivers or are they couriers? And they're both. They do classify their workers and submit reports based on whether they consider them truck drivers, which is usually long distance, and local, which they call couriers. One of the pieces in there is union settlements. And we've seen with Canada Post, these numbers are up and down. Oh, just a note, and I'll, oh, excuse me, repeat it after. I'm doing more on salaries and so forth uh, next month. So April, this is one of the largest. Union settlements covered 116,000 employees, which was one of the biggest in the last 2 years, number of settlements. And those type do influence across all industries, okay, and all jobs. So neither of them kind of parallel. You can see the costs here. So they're, of course, trucking companies aren't changing their pricing, uh, certainly not on a monthly basis. So there's nothing there to lead you to a point of saying, "Oh, this is why trucking is up or it isn't." Excuse me a minute. I think it here is the most important part. So when you're faced with explaining a price increase or defending current prices, I think you need to go on a very higher level, okay? Because relying on a single cost component like fuel or foreign exchange rates as a main driver of price changes can lead to oversimplified conclusion and also lead to trouble down the line. While cost inputs often interact, each one of them follows its own rhythm. Some, such as fuel, can fluctuate dramatically in a matter of days, while others, like wages or capital equipment, adjust slowly over months or even years. Again, going back to the slow burn. Multi-factor cost pressures, and I'd suggest you keep track of that. But those are, I would look at as the wording to discuss with your clients. Because it's not just raw materials, labor costs, energy prices, transportation, etc. And even if one component spikes, other costs are usually quietly rising. Inflation. We had high inflation for a number of years, but it keeps impacting what's going on in the future. We can see some of it with Canada Post and other union settlements, that having a 5-year contract and then coming up where they didn't see this high inflation, that's going to kick in. Uh-huh. And it's going to influence other industries. So it's not something that happens this month and then disappears next month and has no influence going forward. Uh, the cumulative cost pressures, and I think that is a great phrase in there. It rarely hits just one input. I remember a few years ago, and where everybody was talking about ocean freight and so forth. And yeah, it was huge, the increase. Uh, but there were probably other things happening at the same time, which were overshadowed, okay, by this huge uh, increase in ocean freight at the time. And also delayed price response. Uh, Many firms hesitate to raise prices, fearing customer backlash or loss of market share. Instead, they trim expenses, delay investments, or accept lower profits. But it can't go on forever. And this is probably something that we're seeing right now with the US inflation. They're fighting to keep prices fairly stable, but something's going to break. And the breaking point, eventually, one cost spike, a sudden jump in fuel or wages, become proverbial straw that breaks the camel's back. At that point, a price increase isn't just strategic, it's necessary. But the one thing there is also to avoid is to say that's it, because there's been a whole number of items, okay, that have also continued to change. So either responding or having discussions on these points with your clients and even with your own suppliers is key to get those points right and get a common understanding that there are multi factors going on. The timing of all these things when they hit you, some are slow, some won't really impact for up to a year or more, and so forth. It's just as it says, oversimplified conclusion may set you up for questions at a later date. Also in the report, did a review on retail trade. And again, I put down is another headline is Canada's retail sector remains resilient despite rising trade tension. It was on CBC, CTV. They were basically copied and pasted from Statistics Canada's comment, which kind of makes you strange because I even said in the newspapers, Toronto Star included, had a very similar headline, except a couple of weeks later they said, we're heading for a recession. But to look at those numbers, the blue line here is the previous year. So you see, there isn't a lot of change, just minor. And if you add up in total over those 13 months and compare them to the previous 13 months, retail trade was up 22, $23 billion, which is about 2.6%. But if you compare that to CPI, CPI was hovering in total around 2%, and CPI food was at 3.3. And if you're looking at retail, food is the number one. I just put a note here, trying to keep up to date. June and July, not a lot of change in the retail numbers. They seem to be trucking along at a certain level. But I know a lot of people look at building materials and garden centers. And looking at the same comparison over the 13 months, is it would show that they're down 1% over those 13 months. But if you look at bits and pieces, it was really only 3 months where it missed the previous year's sales. And I'd look at this suggests the dip in value is likely driven by lower prices and promotions rather than reduced volumes. So it was down 1% over the 13, but remember, these are values. Statistics Canada, which is my primary source, only reports values. But I think this is supported by Home Depot. Despite missing their sales targets in the first 2 quarters of 2025, the company has reaffirmed its full year forecast. With access to more granular data, Home Depot's confidence implies that they believe the underlying demand remains stable. And the headline decline may be more about deflation than consumer retreat. Here's another twist to throw and say, what's deflation may be doing to your business or sales? Found another interesting one is general merchandisers remain the 4th largest retail category, trailing only grocery, auto dealers, and gas stations. Given a dominant player in this group, Walmart sells a substantial volume of food at steadily rising prices and has made significant investments in e-commerce. it's surprising to see the sales in this group trending flat or downward. So you would think that with food in there, and we know CPI is growing, is high in the food. If you carried food, you would think your sales numbers would be going up fairly substantially. Now on here, the way Statistic Canada puts together the numbers is that the e-commerce here is also included in general merchandise, which means the e-commerce sales by general merchandisers, okay, like Walmart, are included in this number. They pull them out to have retail e-commerce. All right. So this is retail e-commerce for all type of store types and so forth, including groceries. Now, I'd always looked at e-commerce and said, okay, well, everybody knows. It's not surprising that e-commerce continues to trend upward. But the path hasn't been smooth. Monthly gains seen in previous years are often followed by declines in the same month the following year, highlighting volatility rather than consistent growth. I expected when I put these numbers together to see something similar to the trend line. Trend line is up, but monthly sales seem to be jumping up and down. Now, you also look at and need to look at general merchandisers and so forth and others is what type of, there are store closures, how much sales being taken out. And if you didn't look back, Hudson Bay, okay, the closing of Hudson Bay, I thought was an interesting point, is in 2018, Hudson Bay's revenues were 9.4 billion. In 2024, they were 1.1. That's $18 billion. Move somewhere else. Because as you saw in the retail's been growing slowly, but it's been growing. So there's $8 billion has moved somewhere else. All right. One of the things I always, and I'd love if somebody can tell me, is that everybody else, every other retailer sees a drop in January, which makes sense after Christmas, except e-commerce goes up. Don't know. Possibly something to think about. I included in the report this detailed table of consumer price index, and I think it's very important. CPI, and I've referred to food and auto industry and others, but they have more of a breakdown, okay, into pieces. And as you can see, the year over year, you look at digital computing, computers, laptops, 4.5%. It's down. So when they say CPI is at 1.9, this is a weighted average of all these different pieces. And I don't know anybody who sells everything. So if you're looking at the pieces, non-electric kitchen utility, down 3% year over year, down 1.2 in the month. Those are in the interesting numbers for most businesses. Not CPI is 1.9 or 1.8 or 1.7. Video auto subscriptions, I always look at that because it kind of is my quick check to see if they know what they're doing, and they do. About 7% up year over year. I can see this on my normal monthly bill. So it's a good practice. I'm thinking maybe this chart itself I should include in future reports because it really gives you a bigger breakdown of consumer prices. All right. I guess the key points of what I wanted to cover was that it's rarely a single component, okay, like fuel or exchange rates. Uh, that is the main or only driver of price changes. And referring to one may mislead your suppliers and your clients into thinking that if that changes, then they should expect a price decrease. So it's all of these bits and pieces. And I suggest if you can refrain from pointing at one item, but keep it general. There's certainly pieces there that will force you to go to a price increase, but don't overemphasize it. And retail trade, what I meant is Canada's retail sector, it's stable. It's not doing great, but it's stable. Different products are impacted by prices, some by volume. It also suggests that dip in total sales is likely driven by lower prices and promotions rather than reduced volume. I don't have access to the volumes. I don't know who does because many of the retailers, particularly Amazon, don't share their information. And even if they do share their information by law with Statistic Canada's, that does not include the third parties which they service and is a huge part of what the total sales coming out of Amazon. So I'd be very careful if somebody said they knew what the volumes were. I referred to next month, and next month what I'm going to be going over is three-party or third-party foreign exchange, and weekly salaries and so forth. A lot more on salaries. Now, what I mean by on the foreign exchange is something I've been dealing with, and it's because of my banking background. And just for an example, is where you have a fixed contract on US dollars, let's say $10 per unit. Okay. The exchange rate, okay, what that did with the exchange rate is if you were buying from Brazil, the Brazil seller would actually be receiving close to 61 real. And it would cost you in Canadian $14. By August, the real would drop to, he'd be receiving 54 and it would be costing 13.78. What I did a lot, particularly when I was working in Asia, is to be very careful in dealing with certain companies where they may be forced by their exchange rate, which is US dollar, let's say this is in Asia, but real could put them out of business. Right? So I'll be going through a number of those. If anybody is dealing with Argentina, they've had a deflation about or inflation. Their exchange rate is down about 50%. So if you're an exporter, you're doing great. You're getting double what in local currency than what you did before. Okay. So one of the things when people, and a lot of people, there's been a lot of talk about trying to do something different with the US dollar, of not having it fixed. And I'll go over some of those options in next month's report. Weekly salaries and hourly rates. I'll be going through next month on something similar to what I did with using CPI. Again, the high level, okay, looks reasonable, but when you drop it down to individual categories, it's hard to rationalize. Okay, many have not kept up with CPI, or a number. Others, very few I found, and I'm not quite finished the analysis for that. Very few of them actually exceeded CPI, which is, I guess, understandable. But anyway, that's what I'll be moving through, CPI. And you have to look at year over year. If you worked in interest rates and so forth, there's certainly a compounding effect. So if they're reacting 2 years later to something, then there's a compounding effect or a compounding effect that haven't taken place, because CPI is compounding. They continue to look at it year over year. So 5 years down makes a difference when it happens which year. So that's next month. I've changed what the report looks like, and I really would appreciate any questions, comments, suggestions. If you want a copy of this presentation or report, you can get it through myself, Mike, or it will be on the resource library. And if you need the tables again, I say, or the data, I can work with you to get it to you, either through myself or directly from Statistics Canada. So I thought, well, it's 9:45. Too bad. Questions, comments, I'd appreciate them. No?
Sorry, sorry, it's
I guess,
oh, sorry.
yes.
Yeah, no, I was just getting a comment. So Linda McDonald, I'm the head of finance for Granite Toy. And I gotta tell you, it was interesting because I know from the transportation side for me, I'm constantly going back to our supply chain earlier in the year and saying, why aren't I experiencing, the savings from the carbon tax removal and everything else? So I've been challenging the supply chain. So this has actually given me a lot more insight into why I'm not seeing that. So appreciate that.
Okay, thank you. Yeah, it's hard. As you see, it's not necessarily the commodities, it's what is on the invoices that come in every month.
Yeah.
Right. I apologize for having to delay it. My daughter had a baby last weekend, and I've been taking
Congratulations.
care. Thank you.
Well,
I've
but
been taking.
you didn't deliver the baby, so you should have still held the webinar.
I wasn't even around. I had my 4-year-old, and I was about to say, I've answered more questions in those 3 days than I ever have in business. Grandpa, why do babies not have teeth? What? Anyway, it was fun but exhausting.
I bet. So, Bob, are we gonna have a recession this year or what?
Depends what a recession is in your description. I think they should come up with another one. So it says if GDP is negative for 2 consecutive quarters, but as I was saying in the first part of it is 0.4. What if it next quarter is 0.1 or 0.01? Is everybody going to be pulling out their hair saying, oh, we're in a recession. Oh my God, what are we going to do?
Yeah.
Relax. Economists may like to sit around and discuss this and so on and so forth. But yeah, things could be stagnant for a while, I think they need to redefine, like everything is being redefined as to what's a recession. When do you start pulling out your hair? Probably never.
Yeah.
If you thought if you're an importer and you saw ocean freight going up to 18, 19,000, yeah, panic time, man. But hey, work through it.
I know you've talked about it in some of the past webinars about the new infrastructure national projects that are going to be coming down the pipe. They can
Yeah,
have a big impact on the economy. And
yeah. And I think that's key. Some of them you look at and you kind of scratch your head is, well, the auto industry is important, particularly to Southern Ontario. One of these projects would hire more people than are in the total auto industry. Like some of these are huge. So you kind of look at it, it's kind of the flexibility of the workers. My brother-in-law has been working out in BC on the LNG for about 3 years now. He works 2 weeks on and 2 weeks off. It's making a pile of money, I'll tell you. But he's away from home 2 weeks every month. And that's probably the unemployment, where you see in the unemployment, there's 500,000 open jobs. And that's people that either aren't qualified, won't move to where the job is, or vice versa. And those. So a lot of stuff, it takes time. It takes time to adjust, get the workforce in the right place, doing the right things, the industry focused in the right direction. It takes time.
I'm wondering down the road as well, Bob, that we can do a real sort of in-depth focus on sort of the three industries that our associations are covering. So hardware, home improvement, and then sort of housewares, and then also the office products side, and whether you could kind of do a real in-depth analysis of what's happening in those industries. Is that something we could look at doing?
Yeah, I'm looking at October, November. What I'm kind of looking at is a lot of it is, of course, wholesale. So in particularly the hardware and many of the pieces of the hardware, looking at construction, and the construction industry, which is probably more than 50%. And when they look at like B2B, according with Statistics Canada, B2B is not included in the retail numbers. So if you sell product to banks, big institutions, other businesses, they are not in the retail numbers that Statistic Canada reports. And I went back and forth with them a few years ago, kind of scratching my head. So the B2B business, or the commercial business, which is referred to, is not considered retail by Statistics Canada. Those numbers are in wholesale. So we need to try and take apart those bits and pieces to really see what those type of sales and what's happening to them. But that'll probably be into November, which hopefully what's going on in the market will shake out a bit. But very key.
Absolutely. All right, any other questions? Okay, great. Thanks everyone for joining this morning, and look forward to hoping to see you on the next webinar next month, and look for the report coming out for next month, probably in a couple of weeks, Bob, I guess.
Yeah, unless my daughter calls and says, "Come," which is what she said Saturday morning at 6 o'clock. Dad, come.
I think we're trying to have some consistency in when we hold the webinar. So at this point, we're kind of looking at the last Friday morning in each month, give or take. Sometimes we have other things happening, but that's sort of the time frame that we're looking at for these webinars going forward. So anyways, thanks again, and everyone have a great day and great weekend, and go Blue Jays.
Yeah. Thanks, everybody.
Thank
Take
you.
care.
Bye.
Cheers.